Okay, good evening, everyone. My name is David Cashman. I work with SEB Housing, and this is the information session for the affordable unit, the last affordable unit at Meadowview Commons in Easton. So before I start, I just want to ask if someone who's watching, I see that there are 4 folks tuning in already. If someone who's watching could just confirm in the dialog box, and I'm going to type something there now, that everyone can hear me okay. I don't want to get too far ahead of myself. I want to make sure that you can hear me. So let me just ask the question here too. If someone could just confirm in that dialog box. And related to that, obviously watching on the YouTube live stream, you're not able to ask questions out loud, but you can type them in the box. So please feel free to do so if you do have questions. And I will, if it's something that I'm going to address later, I might ask you to hold on for just a moment. Or if not, I'll pause and try and answer the question just then. And if that doesn't do it, our information is on the application. You can always call us, you can email us. You may find that you have additional questions as you begin to fill out the application. That oftentimes happens. So that's totally okay. If you don't think of your question right this moment and you think of it later, that's fine. I'm going to pause for just a second because I do need to bring in any folks who want to attend by phone call. So just hold on for a minute there, and I'll come back to you and we'll pick it right back up where we are. So let me bring them in.
Welcome, and thank you for choosing freeconferencecall.com. You are helping people around the world communicate for free. Please enter your access code box. If you are the host, press star now. Please enter your PIN followed by the pound or hash. Thank you. You are the only participant in the conference.
Okay, thanks for holding. Doesn't look like anyone's confirmed that they can hear me, so I'm going to hope that you can. I'll ask the question one more time just in case, and if someone could just confirm in the box, that would be great. Let me just do that now. And again, if you have questions, you can type them in that box, and I will answer them as we go along here. So this is the information session for the last unit at Meadowview Commons. You may be aware that there are 9 total affordable units at this development. We have already had a lottery for the first 8, and those 8 units are reserved and no longer available. However, there's one more unit available, and that is the unit that we are having this lottery for. As you'll see on the materials, the unit should be ready pretty soon. Thank you, Samau. I appreciate that for confirming you can hear me. Unit should be ready in the next month or 2, I believe. It's this new construction. You can probably appreciate that sometimes these things change, schedules change, but that was the last I heard. So it should be ready basically once the lottery is done and the top household will be able to move forward without much delay. Applications must be delivered or postmarked by 2 p.m. on September 21st, so a little over a month from now. And if they're postmarked by the 21st, they must be received within 5 business days. So if you are going to put it in the mail, you might want to track it or do something to ensure that it's going to get there on time, because if it does arrive on the 6th or 7th day, it's going to be late. I want to point out, and this might be one of the most important things that I tell you actually this evening, get your application in early if you're interested in this opportunity, even if you're not sure that it's 100% complete. If you think it might be, but you're not positive, get it into us, because what can happen is, you may have given us everything that's technically in the application, but sometimes people provide us information that actually raises additional questions. One thing that often happens is, as you'll see in the application, you have to provide bank statements. And, so we may be looking at the bank statements. We may be able to tie certain deposits in your bank statements to your job. Great, that's wonderful. But there may be other deposits into your bank account, to your checking account, your savings account, whatever, that's not tied to your job, right? And so even though you've given us the 3 most recent bank statements, which is what is required by the application, and you check that box off and you say, okay, SCB said they need the 3 most recent bank statements, I've given them that. Well, in fact, the bank statements themselves raised an additional question because there was something in there that we needed to have follow-up on. And so if you've now waited till September 21st to submit everything, and you've checked off every box, you've gone through it 3 times, you've said, okay, this is great, this is complete, it may in fact not be 100% complete, because there could be something that you've given us that raises an additional question. So point is, get it in early. It's not a one bite at the apple type of situation. It's not like a exam paper where you get to turn it in, and once you turn it in, you don't touch it again. It's just gets graded and that's it. If you turn it in a week from now or whenever, you can expect that within 2 or 3 or 4 business days, depending on how busy we are going to get back to you and let you know the status of your application. In the vast majority of cases, when people first submit an application, it's not 100% complete. And in that case, we'll give you a very bulleted and hopefully clear checklist that says, here are the 5 items that are outstanding, and here's exactly what you need to provide. And then you go and you track down some of those, and we look at it, and maybe we come back and say, actually, there's still this 1 item that you still need to provide. So, I'm not encouraging anyone to submit an application that they know is grossly inadequate, or they haven't collected any of the documentation that they know is required. I'm not encouraging that. However, I'm also not saying, don't wait. I am also saying, do not wait until the 21st until you think it's perfect. If you think it's close, get it in. Let us take a review. Let us get back to you. And that way you'll kind of know exactly where you do stand. And you won't be scrambling at the 11th hour to try and collect documents that you hadn't provided. I'm sure if you're looking at this, you may have already looked at the property website. If not, you can just Google it. They do have a website. You can see some photos. You can read a little bit more information about the residences. We're not on site. We're an off-site affordable housing consultant. So let me just give you a little bit of information about the units, but this is by no means intended to be exhaustive. You should take a look at the website where I think you can find more information about the unit that's available. But it will have central air conditioning, a kitchen with a granite countertop, so high end. There's a basement in the unit, though it is unfinished. There's a front porch with composited decking. It looks like there will be different flooring throughout the unit. So in the kitchen, eating, and living room, it's going to be hardwood, and those are on the first floor. In the mudroom, the laundry room, and bathrooms, there will be tile floors. And then also in the bedrooms and on the stairs, there's carpeting. So you've got 3 different sort of floorings throughout the unit. There's a laundry room on the 2nd floor, although the washer and dryer are not provided, so you would have to purchase those on your own if you intend to get that. And the heating system will be forced hot air of a high efficient variety, fueled by natural gas. Obviously, the town of Easton is a desirable place to live. There's a lot going on there. There's outdoor areas. There's a historic district. They've got a beautiful library where, in fact, before COVID, we used to do the information session and the lottery. So there's a lot in Easton. It's a great place to be able to buy a home and settle down. The affordable unit is going to sell at a price of $225,000. The monthly homeowners association fees are $106 per month. This is a 2-bedroom unit with 1.5 baths. and it has approximately 1,660 square feet. That does not include the basement and the garage. And there is parking for the unit. It'll be a one-car garage, and there's also a driveway with one spot. If you are curious, the affordable sales price doesn't change based on any particular applicant's income or asset picture. It's set pursuant to a formula that takes into account area median incomes for the Boston, Cambridge, Quincy area. And so it's sort of formulaic. It's not taking into account a particular applicant. And it does factor in items such as taxes and the HOA fees. Anyway, I don't need to bog you down with how it gets set, but I think for purposes of this, sufficient to keep in mind that that's the sale price, and that's not going to, it doesn't fluctuate, doesn't change depending on which applicant ultimately gets to move forward after the lottery. The affordable unit does have a deed rider, okay? And the purpose of the deed rider, which ends up getting recorded, executed and recording on the closing, is to make sure that the unit stays affordable in perpetuity, to make sure that if you're the lucky buyer who gets to buy this unit and maybe 10 years down the road, you decide that you want to sell it, well, it's got to be sold to another affordable buyer. It doesn't get sold to a market rate buyer. And it also gets sold for an affordable price, which again is going to be calculated pursuant to a formula. In general, the price can go up modestly each year, okay? And it depends in part on what happens with the area median incomes that HUD sets. I can't tell you what it will be in a year or 2 years or 10 years. I can only tell you that generally it does go up, but not in the way that, say a market rate unit might fluctuate very rapidly depending on the market. It's probably going to be much more incremental than that. And so in general, these are great opportunities. It's a great opportunity to buy a beautiful new home at an affordable price. You may be able to, upon resale years down the line, realize some profit. But if you're thinking of it as, an investment that you're going to turn around at a future date to recognize some big profit, I wouldn't think about it like that, because that's probably not accurate. Okay. Let's talk about some of the eligibility requirements to get into this lottery and ultimately be able to purchase this unit. I'm going to go through just sort of the bulleted list first, and then I'll jump into some of those bulleted items in more detail. So the first is that everyone in the household must qualify as a first-time home buyer. Okay, that's number one. Number two, the entire household's income and assets must be below the maximum limits as set by the program. That's number two. Number three, the household must be pre-approved for a mortgage, and that pre-approval will have to be submitted with your lottery application. And finally, the fourth one, households or their family members cannot have a financial interest in the development or be a related party. So if you know Mark Perrin is the developer. Mark Perrin is the developer of this unit and all the units in this development. If you're related to Mark or work with Mark or for Mark or people in your family do, that would disqualify you. If you don't, you don't need to worry about it. You can just check off no in your lottery application. And that's as much as I'm going to say on that, because there isn't a whole lot more to say about it. There is a question on your application that asks about this. It's on one of the first few pages, so just check off yes or no and recognize that if you are related, great. I think Mark's a nice guy, but it would disqualify you from this opportunity. And, the rationale behind that is it can create the appearance of impropriety or unfairness or differential treatment. So a person is a first-time home buyer if no one in the household has owned a home within the preceding 3 years. And that, home ownership is defined sort of expansively. So if you owned it jointly or you owned it in trust or in some other fashion, that still counts. Okay. Even if you didn't live in the home, if it's maybe it's a property you owned and rented and you've never lived there, that's nice, but that would still count as having owned a home. Okay. Now, there are exceptions to that rule. There are a number of exceptions. There's 5 in total. 2 of them virtually never come up, but you can read about them in the information packet. And again, I should say, if you haven't read the information packet, you should spend time and look through it because there's a lot of information in there. We try and ask and answer a lot of common questions that come up. So before submitting an application, I would actually recommend that everyone spend some time taking a look at the information packet, because you may very well find that you have questions and they're right in there, or that there's information in there that helps you when you're completing the application. So that would definitely be my recommendation on kind of step 1. The 3 that kind of do come up sometimes, the exceptions to the first-time home buyer, is for displaced homemakers, single parents, or age-qualified households. Displaced homemakers and single parents have in common that, the person was married to someone, owned a home with that person, is no longer married, and doesn't own the home anymore. In the single parent exception, they have to have at least joint custody of the child or be pregnant. And in the displaced homemaker exception, they have to be someone who worked primarily without compensation in the home for a number of years. Okay? For age-qualified households, the age is 55. So if the person who owned the home is 55 or above and they own it, let's say they own it now, that's okay. They can apply. They wouldn't be precluded by the first-time home buyer rule, but they would still need to sell the home before they could buy this home if, in fact, they're the lucky buyer who's able to move forward through the lottery. So, Simone, can I apply if I'm going through divorce? Good question. And the answer is yes, if the divorce has already begun. The divorce will need to be finalized by the time that the lottery is complete, because we can't put a household on the clock to reserve the unit without knowing what their income and assets are. And we can't determine what a household's income and asset picture is going to be until the divorce is finalized, because we need to see the final divorce settlement that allocates the assets from the divorce, whether there's child support, whether there's alimony. So those are the things, those are big questions. And we can't have you moving forward in the process until we have answers to those questions, and we won't have those answers until the divorce is finalized. So the answer is yes. If the divorce is ongoing at the moment, yes, you can apply, but you will need to have the divorce finalized by the time that the lottery is complete and by the time that you are invited, if invited, to move forward if you're one of the top households after the lottery. Okay? And in fact, there's a question right in the information packet that asks exactly that. So if you somehow forget my answer, you can probably find it back in that information packet when you take a look at it. It's on page 5, actually. That very question. Does my separation or divorce have to be finalized when I apply? And you'll read the answer I gave you just there. So that's it. So just, take a look at the information packet. If you haven't owned a home, then you don't need to, if you've never owned a home, or if you sold it 4+ years ago, you don't need to worry about it. If you currently own a home, you would need to meet, or you owned it within the last 3 years, you're going to have to meet one of those 3 or 5 exceptions, which you can read about in the information packet. And if you do meet one of the exceptions and you currently own it, it will need to be sold before you're able to buy this home, because you can't own a home and purchase this home. Okay, you'd have to sell it first if you meet one of the exceptions. Okay, let me move on to the kind of second criteria, and this is a big one, which we won't even try to kind of unearth every detail on in the information session, because there's too much to say and it's too varied and it's totally particular to every applicant what their income and assets are. But I'm going to go through some of the kind of big picture items just to give you a sense of it. And I think a lot of this stuff will become clear as you begin to complete an application, and you'll have specific questions potentially about your specific income and assets. So I'm just going to kind of give you a bird's eye view of this. And then, obviously if someone has more specific questions, you can ask them, or you may not know what your questions are until you start filling out the application, and that's totally okay too. So in general, when we're talking about, there are income and asset limits. The income limits are set by household size. So the income limits are different depending on how many people you're applying with. The income limits are set according to the area, which is the Easton Raynham area. Again, that's a HUD defined area, and you don't need to write this down because it's in the information packet, it's in the application, it's on our website. But for a household size of 1, they can make up to $55,950. For a household size of 2, they can make up to $63,950. For a household size of 3, they can make up to $71,950. And for a household size of 4, they can make up to $79,900. That's gross income, not net income. So that's before taxes, that's before any money's taken out. It's your gross income that we're looking at and comparing against those limits. In general, when we're talking about income, we are required by the program to project income moving forward over the next 12 months. So in other words, when assessing whether someone qualifies and meets the income limits, we're looking at what they're making now and making our best guess of what they will make over the next 12 months with consideration to what they've been making recently, because what you've been making recently is really the best information that we have available to us to predict what you will make moving forward. All sources of income are counted. All sources of income are counted with the exception of income from minors. So if there's a 15-year-old child who's going to be moving forward with you, who works and makes money at a job they have, that's great. We're not counting that. Also, we do not count anything over $480 for full-time students who are dependents. So if you have a 20-year-old kid who goes to a college locally, I think Stonehill's in Easton, so let's say they go to Stonehill, they're going to be living with you. They work in addition to being a student. They make $5,000 a year. That's great. We're only counting $480 of that, and the rest we do not include. Households, let me tell you a little bit more about income in a second, but households will need to submit their 3 most recent tax returns. And really one of the biggest reasons we do that is because we need to see that you haven't owned a home in the last 3 years. So you have to provide your tax returns for 2020, 2019, and 2018. You should be able to get those from the IRS's website, or if you use TurboTax or H&R Block or one of the other ones, you can download it right from the website and give us. We need the computerized transcript of the tax return. Income is defined pretty broadly in this program, and again, this is not how SEB. We're not just making this up. This is what the program requires us to consider. And can include myriad things, some of the most common of which would include the income that you make from your job. If you're self-employed, the income that you make from your self-employment. Maybe in this day and age, plenty of people have both. They have their Monday through Friday job. They work for an employer. And at nights or on weekends, they have a side gig. They drive a little bit for Uber. They have a little business where they sell stuff online. That's great. That also obviously counts for self-employment. There is a section in the application at the end that you will have to fill out with profit and loss statements and financial statements buttressing or showing your profits and your losses. Unlike employees who work for an employer, for if you're self-employed, it's the net income that we're counting. So we are factoring in the cost of doing business, and we're not if you're making $10,000 but it's costing you $5,000 to run the business, well, then you've only made $5,000. You haven't really made $10,000. It cost you $5,000 just to get there. So there's a little bit of a difference for self-employed individuals versus individuals who work for someone else. If you're self-employed, it's your net income that we're considering. For all other employees, it's your gross pre-tax income. Other sources of income that can be applicable or are receiving child support or alimony, that counts. If you receive Social Security income or Social Security disability income, you may have a pension or retirement funds, and those are interesting because those can kind of count as income and assets. If you're drawing down from your, let's say you have a 401k and you're actively drawing down from it and you receive money every month, let's say, well, that's income. But there's also this whole retirement account that's an asset, right? And so we'd be counting the net cash value of the retirement fund, what you would get if you were to take it all out. Okay, so it's sort of, those kind of count as both. There could be an income stream, that's the money you take down regularly each month, and then there's the asset portion, which is the whole kind of funds that you have there. We take the net cash value and apply that toward the asset limit. You could be receiving unemployment compensation. Another thing to include here is that for federal unemployment, some of the COVID-related stuff, that does not count, okay? So if you received FUPC, or there's a whole bunch of acronyms from some of the federal unemployment benefits that were available because of COVID, that does not count. However, if it's regular state unemployment compensation, then that does count as income, and it does get factored in towards the income limit. You could receive workman's compensation. Another one that comes up with some frequency is periodic payments from family and friends. That's great if you have a family member who, say, gives you $1,000 every 2 weeks to help with just the cost of life, getting groceries, childcare, whatever the case may be. That's wonderful, but those periodic payments, if they're frequent and they're recurring, then that would count as income. Okay, if it's once a year, twice a year, something like that, that's not frequent enough. But if it's, weekly, monthly, that type of thing, that will count as income, and you would need to disclose that on your application. And the person providing the money would also have to sign a statement detailing how much they've given you, how much they intend to give you moving forward, and the purpose for which the money, they're giving you the money. You could also have assets that generate interest income. So common one is you have a bank account, you have a savings account at a local bank, and that savings account generates interest, usually not a whole lot, but the interest that it generates does get counted as income and gets applied towards the income limit. And there may be other ones we haven't listed in the application, and if you have something else that isn't there, please list it. Even if you don't list it, it usually will show up somewhere in the statements you have to provide, whether it's your taxes or your bank account statements or elsewhere. And so we probably will come across it and have to ask you about it. So it's just, probably easiest and best if you just go right ahead and disclose it in the application in the income section. Section. So there is a whole table in the application. I recommend spending some time looking through it. It can be easy to forget stuff. It's not intentionally omitting it or hiding it. It just, you may not think of something as income that the program requires that we count. And so take your time looking through that table, because we do list a lot of the common things that come up, and even things that people don't necessarily think of as income. Like a lot of people wouldn't think of unemployment as counting as income, but it does. Okay, and that's why we list it in the table in the application. So just spend your time with when you fill that out, and that will also cue you in for the types of documents that you will have to provide. Okay, assets. The asset limit is But let me just say this too, actually, before I wrap up on income. There's no minimum income, okay? There's no minimum income. So there's no, like, you have to make over X to qualify. But as I already said, you do have to be able to get a mortgage pre-approval that you submit with your application. And so obviously when you go to a bank to apply for a pre-approval, they are going to look at your income and assets. And so effectively, there is, in a way, a minimum income vis-a-vis the bank, only being willing to loan to people who have sufficient income and assets. So there's that. But the program does not have a minimum income limit. Okay, there are asset limits. The asset limit, unlike income, it doesn't change depending on the number of persons in the household. Remember I said before, depending on household size, if you're a household size of 1, you can make $55,950, whereas a household of 4 can make $79,900, so pretty good difference. Depending on how many people you're applying with. With assets, it's just $75,000. Doesn't matter if you're a household size of 1, 2, 3, 4. Assets are calculated at the time of application. So an asset that was maybe, worth X value 2 months ago, well, really the relevant value is what is it worth now at the time you're applying. Monies that you would use as a down payment will be counted as assets. That does come up sometimes. I've had people ask me that question. Well, I have $100,000 in assets, but I'm actually going to use $40,000 to put down on the home. So I have 60, right? And for better or worse, the answer to that is no, you have 100. You're using 40 as a down payment, but that doesn't mean it doesn't count towards your assets. It does. Assets, like income, can be varied. There's many different sources of assets. We don't include personal assets, so the value of your jewelry collection or your car or your, baseball cards, for lack of a better example, I can't think of right now, those types of personal tangible assets, we're not interested in. We're not asking you to document them. Those don't count. But there are various other types of assets. And so in the application, same as with sources of income, we list a lot of the common asset sources. And so when you fill that out, please take some time going through the table, because again, you may forget about something. It's not purposeful. You just kind of didn't recognize that it might count in this program. But if you take your time going through the table, that will sort of prompt you, oh yeah, you know what? I do have a Venmo account. I do use PayPal. And oh yeah, I collected $300 from my friend the other day who owed me. And that $300 is sitting in my PayPal account. That's an asset. That's effectively like a checking account. The money goes in, it sits there, then you can go pay someone else with it. But it's no different sort of from having a checking account. That is money at your disposal. So you would have to provide statements from your PayPal account, your Venmo account, whatever other Cash App that you may use. But again, that would be a super easy one to forget or not recognize without looking that you wouldn't necessarily think to provide unless you take your time going through the asset table. So take some time going through the asset table. You'll see we ask about checking accounts. What's the name of your bank? What's the account number? We're going to need to see the last 3 statements. It's got to be the full statement. We need to be able to see all the information on there, what the balance is, what months it includes, the account number, whose name is on it, etc. We need it for the savings account, if you have that. If you have multiple banks, we need to see from all the different banks. Trusts can be a tricky one because trusts are so varied. We need to see the trust documents. Trust can be written in many different ways, but if you are a beneficiary of a trust, we would need to see the trust documents to figure out how to include, calculate that as an asset. You could have retirement accounts, which I talked about a little bit before when I was talking about income. Even if you're not accessing it right now, so like I'm under the age of 40, I've started saving towards 401k. I don't have any intention of touching it anytime soon, but that doesn't technically mean I couldn't. Could, if I was in dire straits and I need to get that money out, I could. Now I would pay a penalty. It would probably be a pretty significant one, but I could get a statement from the administrator that says, if Dave were to withdraw this money today, here's the penalty, here's how much is in there, here's the penalty he would pay, and the remaining amount I would get is the net cash value, and that's Dave's asset. That counts. So if you have that, you would need to list that and get such a statement, because that does count. And I know that sort of rubs some people the wrong way, because you're thinking, I'm not touching that for 20, 30, 40 years. I hear you. I agree. But that's what the program says. And again, the fact that you have no intention of doing it doesn't mean that you couldn't, and therefore that we do have to count that. You may own some stocks, you may own some bonds, you may own invest in mutual funds, you may be getting down payment assistance from a friend or family member. All counts as assets. You might have investment property. So take your time going through the asset table so you don't overlook anything. And the general rule is, you'll see in the application, you have to provide the last three statements for your asset accounts. Okay, so I'm going to stop there on income and assets. That's sort of bullet point number 2 of eligibility. Let's move on to the third one, which is that households have to be pre-approved for a mortgage. And we've listed out exactly what the standards are for being pre-approved in the information packet, so you don't need to write this down or memorize it, but it's got to have a fixed interest rate. So there's no variable. You can't get an ARM, 7-1 ARM, 10-1 ARM, whatever. There's no adjustable rate mortgages. You have to have a fixed interest rate. It has to have a fair market interest rate. You can find out what that is on Mass Housing's website. You can call them. We've listed that in the information packet. You can't have more than 2 points on the loan. It can't be an FHA or VA loan, as they will not accept the terms of the deed restriction. And I think that's because those get sold on the secondary market. There may be occasional exceptions to that, but the general rule that we've seen is that they will not accept the terms of the deed restriction. So FHA and VA loans are pretty much out. Buyer has to provide a down payment of at least 3%. So you can finance up to 97%, but not more. And if heads of household are not married, the names of all heads of household must be on the mortgage. And that's to sort of prevent an applicant maybe listing a friend who maybe doesn't totally intend to live in the unit or be totally involved with it, but they need them to get under an income limit. And then that person's not really going to be on the mortgage and not be responsible. This is to prevent that from happening. So if they're heads of households who are not married, they both need to be on the mortgage. Conversely, if 2 heads of household were married, they could apply together, and one of them, if they decided to, could be on the mortgage and the other not. And sometimes that does happen. Sometimes it's more advantageous to go that way. In general, we recommend that households go to banks that have some knowledge of the affordable program. And we list the website, the MHP website, in the information packet on page 8. You can go on that website. You can look by geographic area to try and find lenders who have some familiarity with the affordable program. It is more advantageous to do that than to go to a bank who doesn't have that knowledge or experience, because a bank that doesn't have that experience could say that, give you a mortgage pre-approval, things are moving along, you're excited, you're going to buy your home, and then when it comes time to get the mortgage commitment, the bank says, oh, we didn't recognize there was this requirement, and actually we can't give you a mortgage or a loan, and we're sorry. And now you've gotten your hopes up and you wish you had gone to a different bank that did have that experience and who could deliver when it matters. So you don't have to. You can go to any, lender of your choice. If you have, someone that you like and trust and you want to go to them, you are permitted to do that. But it is probably a safer bet to go to a bank who does have that awareness and prior experience, so they really do know, yes, our product will work, and we've been through this before. You can make a copy. You can rip that page out of the information packet, page 8, bring it with you, say, I need a pre-approval, I'm interested in this opportunity. Here's page 8 of the information packet. I copied it, I ripped it out, I brought it to you. Mr. Lender, Mrs. Lender, please take a look. Will you be able to give me a product that satisfies these requirements? Easy way to do it. Just bring it to them, take it right out of the information packet, say, here's what I need. Will you be able to provide something that meets these requirements? And that way, when you do get a pre-approval, you have a pre-approval that's a little bit more meaningful, that hopefully means that bank will be able to give you a loan when the time comes. All right, let's move in a little bit to how the lottery works and what it'll look like moving forward. So everyone who's watching this and hopefully is going to heed my first piece of advice, which is get your application in early, because it's probably not going to be totally complete. There's probably going to be something missing, and you want to give yourself time to track that stuff down and not be moving around frantically at the 11th hour trying to get it. If there's anything missing, we'll give you a bulleted list of items that are missing. If you're not eligible, we'll let you know, and we'll let you know the reason. If you think we've made a mistake, you let us know. If you're eligible, we'll send you a lottery application number and a letter that lists items such as, your name and everyone who's in the household, your household type, when the lottery is, how to tune in, and some other information as well. Read that letter carefully. Make sure that the information that's in there is consistent with what you think you put in your application and what you think, what you think should be in there. We don't, we try and be very careful about that, but every once in a while we make a mistake. You may have listed on your application that you're a type 2 household, and we may accidentally put down that you're a type 1 household. And if you see that, you should say, hey, SCP, I'm a type 2 household. Can you please fix this before the lottery? So just take a moment to look through that letter and make sure that everything is consistent with your expectations. When you fill out your lottery application, one of the first questions is going to ask you what household type you are. Are you a type 1 household or a type 2 household? And essentially what this means is type 2 households are households who need 2 bedrooms per the program rules. And type 1 households are everyone else who might like 2 bedrooms, but who don't need 2 bedrooms. So and we list out, there are different compositions that can make up a household type. So just as an example, and this again, there are check boxes in the application, so you don't need to memorize this. You just find the box that applies to your household and you check that off, and easy as pie, and then you move on to the next question. But just as an example, a 4-person household, no matter how it's constituted, whether it's dad, grandma, 2 kids, mom, dad, 2 kids, whatever. If there are 4 people